Welcome everyone to another episode of Just Shilling here. We have a great guest in Johnny. He's going to raise his hand and get back up here, but before we do get into it, just want to go over some quick house rules, folks. We do not talk about anything that is financial advice, and Johnny is here. Wonderful. We do not talk anything about that's financial advice related. We want to keep this as a safe, open space, open to different opinions and things like that. But if it's probably too controversial for a family dinner, we'll avoid that here and want to respect everyone's opinions nonetheless. So, because we do have a lot to talk about and we have a limited amount of time to do it, let's go ahead and introduce our wonderful guest, Johnny. How are you doing today?
Hi, Trevor. Yeah, really good. And thank you for inviting me onto the show. Looking forward to just having a chat and shooting the breeze.
Yes, likewise. So wow, it feels like a few weeks since we had our original chat, and here we are having this conversation. So awesome. While we're here, let's kind of just take a 30 seconds to a minute, Johnny, to introduce everyone, give that elevator pitch to who you are, and then we'll kind of get back and go to your backstory about how it all started.
Sure. Okay. Well, my name's Jonny Fry. I've been in the financial services sector since the late 80s, predominantly been in the asset management world. Set up a mutual fund company, floated on the London Stock Exchange, and the last 7 or 8 years been looking at blockchains, how they're being used, where they're being used, why they're being used, who's using them, along with digital assets in different industries and different jurisdictions. And at the moment, as well as doing that, I work at a ClearBank, which is a UK clearing bank, first bank in 250 years to be set up in the UK as a clearing bank. And we work with about 246 different regulated financial entities here in the UK. And we've just got a license in Europe. So that's what we do. And it's very much looking at digital bank accounts. How do they work? What's involved? And why do we need them? So that's the work that we're doing here at ClearBank.
Fantastic. Thank you so much for that wonderful summary there. And, ClearBank's dive into digital assets, some consider that to be quite a bold move. So, how are you planning to really integrate blockchain with this traditional banking? And do you ever expect any pushback from industry's old guard, or have you ever experienced that at all yet?
Well, here in the UK, historically, we've only ever had 4 banks. Lloyds, NatWest, HSBC, and Barclays. And so most of those banks, unfortunately, if you want to actually open up a bank account with them and you're anything to do with cryptocurrencies, it's just not possible. Whereas we've taken a slightly different view and said, look, provided you're regulated, because we're basically B2B. We don't have any C clients, any direct clients in terms of private clients. But providing you're regulated, we will provide you banking services. But we don't actually get involved in crypto or anything like that. But we do have a number of crypto exchanges as clients. And we really see digital assets when it comes more down to sort of digital payments, because we believe that the future of money is going to change. And people are going to want to be able to have a choice of whether they carry on using what we call credit instruments, i.e. Money created and manufactured by commercial banks. So if you go and put $100 into, I don't know, a bank in the States, let's say Goldman's, then typically what they'll do, they'll take your $100 and they'll go and lend it out to corporates or home buyers.
Yep.
And they'll multiply it by 4, 5, 7, 10 times. It's called fractional banking, and the commercial banks create money in effect. Whereas ClearBank, all we do is take deposits. We hold them sterling at the Bank of England, and euros will be held at the European Central Bank. And in time, we're looking to buy a bank probably next year in the USA, so the money will be held in a Fed master account. So we're very different from many, many other banks. And we see that the use of blockchain technology to be able to create digital products and services is something which, in particular, wholesale institution markets really going to want and actually going to need as we start to move towards delivery versus payment or T0, but I'm sure we'll get into that in a moment.
Yeah, indeed. Now, we've obviously heard a lot about blockchain and it's being, hailed as the future of finance, and even still today, even though there have been some, advances and things of that nature recently, many of these traditional institutions still somewhat seem slow to adapt. So, do you feel that they are generally overall embracing the innovation, these traditional institutions, or are they just trying to kind of stay in the game?
Okay, well, I think it's worth I think it's worth standing back and looking at look at the report from McKinsey, the eminent consultants, and they reckon that by 2027 that there'll be something in excess of $3.2 trillion a year of revenue being created by payments,
Mm.
and this is why we have such a vibrant fintech community, particularly in the US and followed up here in the UK, as if you like, fintech companies, payment companies are trying to figure out more efficient and better ways to service people. And you then sort of flip across and look at the biggest asset manager in the world, BlackRock. And for the first 6 months of this year, 26% of its fund flows came from crypto-related, blockchain-related investments.
Mm.
With the launch of the Bitcoin ETF, Fidelity, the number was 54%. But if you look at the BlackRock board, it's made up of representation from Verizon, from Cisco,
Yeah.
from Saudi Aramco, biggest company in the world, from Estee Lauder. Now you're sitting on that board and you're looking, saying, my goodness, the CEO of the biggest asset manager in the world is saying, I believe we're going to see the tokenization of all funds, ETFs, bonds, real estate, etc., etc. And this is going to allow mass customization, because once you have tokenization, then you can have AI creating bespoke portfolios for you. And you probably then go back to your own boards at Estee Lauder and Cisco and Verizon and say, what's our strategy when it comes to this thing called blockchain? What are we doing about it? Because the biggest asset manager in the world, where I sit on their board, they think it's something, well, they're making money out of it. Isn't it something we need to look at? So actually behind the scenes, you'll find many, many institutions are actually embracing this. The trouble is, Trevor, we've seen almost an obsession about the technology.
Yeah.
And we've got to stop talking about the technology and say, what problems does it solve? What are the commercial opportunities? Because we never had this conversation about, oh, Excel spreadsheets are better or worse, or Word is better or worse than a Lotus Notes. But for some reason, blockchain has been associated with some sort of magical, mystical thing. It's not the silver bullet, but it does offer some fantastic things in certain places.
Yes, indeed. Now, obviously, with your strong background with traditional finance, and really, we were just kind of touched on this a bit about the industry's kind of cautious nature with the potential of blockchain's disruptive energy. So, have you had any kind of challenges with traditional thinking and people pushing back to some of the kind of, I would say, solutions that you've been trying to propose?
Look, no one likes change. Change takes you out of your comfort zone. And therefore, particularly with with some customers, with staff, with regulators, they're trying to work out, what is this all about? But the problem that we face is that normally when you say to someone, oh, blockchain, you say blockchain, digital assets. Oh, you mean Bitcoin, do you? Oh, blimey, that's speculative, goes up and down. Oh, hang on, isn't that something to do with the Silk Road or FTX or something like that?
Mm.
And the problem is a lot of people have got involved in cryptocurrencies, which are one form of digital asset, out of fear or greed. They've seen this thing go from literally a cent to $64,000, and they're saying, well, oh, blimey, I want some of that. And unfortunately, therefore, very often it's a re-education to explain to people how this works. And look, at the end of the day, blockchain, if I could leave one message, and that is simply, it is a great way to improve transparency. And with greater transparency, you get greater confidence, you get greater trust. And ultimately, when it comes to investing, that they are key ingredients. If you're confident and if you have trust in a system, a process, or an asset, then the likelihood is that you'll subscribe a high value to it. And that's what blockchain can help you do. It can actually break through and provide greater transparency, which I think is a really important thing.
And speaking about that, that's really important, especially, maybe you can talk a little bit about your work that you're doing at Turn as well, too. But I know that one of the big things for you is really that the focus on blockchain for financial transparency. And do you think our current financial system can truly handle that level of scrutiny that blockchain could bring right now at this point?
I'm not sure as whether it can handle it, because I think it strives to. One of the prerequisite roles for financial regulators is to maintain confidence in financial markets. If we don't have confidence in those markets, well, you saw what happened in 2008. So
Yeah.
people panic. The trouble is the days of actually queuing up to get your money out of the bank and you see a big long, snake of people, they've gone. If you want your money out, it's the click of a button. And that's arguably what really killed Silicon Valley Bank. There was a run on the money, there was a run on the bank, and people suddenly said, I've got to get my money out. And therefore they were able to do so by just literally clicking a button. And this is one of the problems. In the US, you've got about 5,000 banks. And allegedly, if people took out more than 30% of their cash, not 100%, just 30%, you'd see about 25% of those banks have to fold. See, the trouble is, if you go into your bank, and any listeners can try this, go into your bank and say, I would like £5,000, dollars, euros, please. Sorry, Mr. Fry, what do you want it for?
Yeah.
When do you want it? Can you come back in a week or 2 weeks' time? In Europe, in Spain and France, it is illegal to spend more than €1,000 in cash. Governments don't want you using cash because they can't track and trace it. And people say, oh, but I don't want digital money because the government then knows who I'm spending and where I'm spending and what's going on. Sorry, wake up and smell the coffee. That's exactly what happened in Canada when the truckers shut the border between Canada and America.
Yeah.
So with digital money, you then, providing it's the right sort of digital money, and what we're advocating, we refer to as a digital bank account. So it's just like your normal bank account, but if your money is in the digital part of the bank account, it's backed by 100% cash, typically held, at a central bank or a portfolio of money market funds. So this is very, very safe, and you can rely on the fact that money is safe. You're not relying, Johnny banks with BNP Paribas or HSBC or whoever, and how secure and safe are they? You're not actually saying, I need some investor compensation scheme in case it falls over. No, the money is backed by something tangible. Now, it might be backed by HSBC. They have a gold backing. So it's backed 100%. So my, £5,000 worth of money are backed by £5,000 worth of a gold bar held in a safe. Or it might be €5,000 worth of money held with Europe, Societe Generale, and that's held by an independent ring-fenced sum of monies. I'm not reliant on, is that bank able to repay the money back to me that I've given them because I'm a creditor?
Yeah.
This is creating a bearer instrument, so which means you can then do peer-to-peer transactions. It reduces counterparty risk, and it means you can bring in programmability. And this is, I think, a real key. It's not necessarily the ability to transact 24/7, which is what digital money can do, but you can set up preconditions and bring in that programmability and therefore get to settlement times of the same day or delivery versus payment.
Absolutely. And, this is something that just kind of popped into my mind because you're speaking on the subject, but, different forms of quote unquote digital money. So what are your thoughts when it comes to, and I know you'll be speaking at an event soon about stable coins and central bank digital currencies and how that will all kind of come into play?
Well, it's interesting. If you look at some research from Bank of International Settlement, they're saying a 10% adoption of digital currency could well lead to a 0.1% increase in GDP. So if we have digital currencies, then money around the system can flow a little bit faster, and therefore that could lead to greater economic growth. The trouble is that if we see too much money being taken out of the commercial banks and it goes with a central bank, then you've got to say, how is money going to be created? Because if the banks don't have deposits, then they can't create cash, they can't lend it out to other people. So there is this balance, and the Copenhagen Economic Institute, they did a report and said that if we, in an extreme situation, if we saw a retail central bank digital currency, we could see economic growth permanently diminish by as much as 34 basis points. So you have this sort of almost careful balance between if retail were allowed too much money, then why would you leave your money in any commercial bank? You'd put it all with the central bank where it's much, much safer. Yet wholesale and commercial operations, they want to be able to execute transactions faster and safer by being able to use something of absolute tangible value, as opposed to relying on the credit rating of the institution that they're actually using to make these payments with.
Yes, indeed. Now, something else that I know that you're also interested in as well too, and there's a lot of buzz about ESG and blockchain. So, is this a genuine shift? Do you believe towards sustainable finance, or is this kind of, or is it more about appeasing investors with a good story?
I think the whole thing about sustainability is you want to be confident that the facts that you've been told are correct. And I think this is where blockchain comes in, because if you've got greater transparency and you can be certain of the provenance of what you're being told, then you can draw some confidence as to, if you like, where is that organization in terms of its sustainability and its carbon footprint, and then what measures have been taken that are measurable and verifiable that can then report to show the improvements in that. Whereas at the moment, everything's a little bit airy-fairy very often. And it's a bit like when you give money to a charity, you're never quite sure how much money actually reaches the person in need.
Yeah, you're right.
Whereas when it's on a blockchain, then it's difficult to then argue against the facts, because the information is then put in an immutable format.
Indeed. So that brings me to another question as well too. And blockchain also has this promise of global financial inclusion, and it all sounds very compelling. But do you think that these major financial players are prepared to lead this charge, or is there a risk that their involvement might really kind of dilute its potential?
Well, I think what these digital assets give, they're giving an alternative, Trevor. I'm not saying everyone's going to switch from one to t'other, but if you look at the remittance market at the moment is about 750 billion a year. Is estimated by the World Bank to be going to worth in excess of $1 trillion a year. And historically, the cost of moving money, well, indeed, the cost of moving money at the moment from, say, the UK to South Africa is about 14%. On average, it's around about 6.5%. But if you actually move money digitally, it's almost in real time, and it's practically free. I run as you know, a weekly analysis looking at blockchain and digital assets called Digital Bytes. And I have researchers based in Africa and Asia, and I get them to help me with some of the research, and I pay them literally. I'm sending maybe between $50 and $500 to them at a time, depending on what work they've done over the month. And they're getting that money in real time. It doesn't cost me anything. It doesn't cost them anything.
Yeah.
So this is very achievable. Now, this is challenging the current incumbents who are have historically made a lot of money from the poorest in our society. The remittance market are people like the cleaners, are the sort of the house staff, the cooks, these people that don't have a lot of money, and we're charging them a fortune. People are a little bit more financially educated. They know that they can get different ways to transfer money and pay a fraction of the cost. So to some extent, we're actually leveraging off their ignorance. So this is just an alternative, which as people become more familiar with it, then I think that you're going to see more and more of the fintech players actually offering this as a service to people.
Yeah. And, talk a little bit more about, what you're doing at Digital Bytes as well too, because this is obviously a key source for, blockchain insights. And with so much happening in the space, Jonny, how do you personally differentiate between real breakthroughs and hype? Because there's a lot of that in our space, as you know.
Yeah. Okay. So what we're doing with Digital Bytes is a weekly analysis. We've been doing it since March 2018. So we're doing it quite a while. It takes about 20 hours a week to compile. So there's a lot of reading, a lot of research, a lot of fact checking. And what we're really trying to do is look at what are the commercial applications of the technology and of these assets. And we're saying, okay, so what can we learn that's happening in the agricultural sector, or in the fashion sector, or the insurance sector, or the entertainment sector, and cross-pollinating those ideas and saying, well, what's actually working? Now, having said that, you do get hype, but sometimes that hype can be very, very interesting. And I'd say a good example of that at the moment would be meme coins.
Yes.
Now, meme coins at one level are they look like tantamount gambling. But on the other hand, they're engaging a global community, and they're getting or showing an interest in something. It's all online. It's all almost in real time. And you're seeing some of these meme coins attracting sort of 10, 20, 30, 40 million people in the space of a few months. I think the top 3 meme coins are worth something in excess of 40 billion. Now, I'm not suggesting for a moment that people go out and invest in these things, but as a mechanism, one wonders, could you take a meme coin and what's behind them and the way they function, to, if you like, the technology behind them, and start encouraging people to invest in smaller companies. 95% of all companies in the world are SMEs. Most SMEs, they struggle to raise finance. But I wonder whether we could use the technology behind meme coins, a type of crypto, and actually help finance small to medium-sized businesses. And that really would be a breakthrough.
Yes, it would indeed. And this space is obviously, very unpredictable. I would say overall, and I know this is a big question, but what do you think's been one of your biggest challenges so far, and how has that really kind of shaped your approach to the industry overall?
I think the biggest challenge is just education. It's a lack of understanding.
Yeah.
And it's not that this is new, it's people have preconceived ideas. As I was saying earlier on, if you talk about blockchain and digital assets, people immediately think of Bitcoin, they think of FTX, they think of the scams that have happened. But the reality is there's so much more to the technology and digital assets. Look, the crypto space is worth a couple of trillion. Now, without trivializing it, that's not a lot of money when you compare to the debt market, about 120 trillion. You've got the funds market, 145 trillion, the real estate market, which is 380 trillion, the derivatives market, 1.2 quadrillion. So what I would call real assets are worth 2.2 quadrillion. Now, the Americans will tell you that's 18 noughts. The Brits will tell you it's 24 noughts. All I can guarantee, it's a lot of noughts compared to crypto, which is a couple of trillion. So the opportunity isn't in crypto per se, but it's in how do we solve real problems and make things more efficient in the sort of assets that most of us are exposed to.
Indeed. And, with your extensive involvement, in this space, do you ever feel like you've had to manage kind of any potential conflicts of interest? And how have you ever had to face tough decisions that kind of go against or really help you to maintain your integrity?
Um, well, I wouldn't say against my integrity, but I would say that I've been personally regulated since the late 80s. So having run a regulated and publicly quoted company, you have a very different mindset. I see a lot of things going on in let's say the crypto space, and I've mentioned meme coins, for example. Some of the way people present themselves and some of the statements they make, you think, well, that's no way that could be in a regulated market. But
Mm,
that doesn't mean everything has to be regulated. And if we want to buy some garden furniture, if we want to buy some seeds or bulbs in the garden, or if we want to buy some light fittings or curtains, they aren't regulated. Or let's say we want to go and buy a piece of art. That's not regulated. So not everything necessarily has to be regulated. I'm personally not a big fan of gambling and what have you, but thank goodness, in many ways, that we have a national lottery here in the UK, because the national lottery has been fantastic at funding our Olympic athletes, which did so well just recently in Paris.
yeah.
So it's not that I'm against gambling; it's just something I don't particularly. It doesn't rock my boat.
Yeah.
But a lot of what we're seeing out there, it is very, very speculative. But I see the technology being able to be used. So let's take money market funds, which you'll be much more familiar in the States. They're worth about $6 trillion in the States. Over here, they're about 50 billion. You drive down freeways in the States and you see adverts for money market funds. You'd never see that in this country.
Mm,
Now, many money market funds are being tokenized. They're being turned into digital assets, which means that you can put your money in and get your money back out the same day. So it's like having your money in a bank. And I'd suggest that a money market fund is going to become a threat to, I think you call them savings accounts in the States. We call them deposit accounts here in the UK. So you can have your money professionally managed. Don't leave it with one bank, but have it professionally managed by some of the best treasury managers in the world. And instead of earning your interest once every 6 months, you'll definitely get it paid monthly. But some companies are talking about they've got the ability to pay it hourly.
mm.
So if you've got a lot of money, you're a company, then you want to make sure that you're going to get your money paid and it's worked on an hourly basis, because then it becomes a real alternative to some of the current deposit services that we have at the moment. Now, that's quite an interesting opportunity.
Yes, indeed. And with blockchain regulation, we all know that it's complex and at times often contentious, right? But do you think that the regulators, maybe just for the ones that you've been able to work with in your jurisdiction, do you think that they are, truly focused on protecting consumers, or is there maybe a bit of a power play to control the industry more happening? Do you see?
No, I think it's to protect investors. I think it's to protect consumers. Look, 90 odd percent of all central banks are looking at blockchain technology in the form of central bank digital currencies. I think the trouble is that, as they say, a fool in the money are easily parted. And when you're seeing the sort of gains, a few years back, what was it? Ripple went up by 38,000%. 1,000%. So people have rushed into some of these cryptos on the basis that it's a get-rich-quick type scheme. And I think understandably, regulators saying, well, hang on, you just got to be careful. Not everything is guaranteed. You're not necessarily going to make loads and loads of money. So let's have a degree of caution over this. But the underlying technology, without a doubt, they're beginning to see the extra transparency. They're beginning to see the ability to get to delivery versus payment. They're seeing the reduction in counterparty risk. So they're beginning to understand that the technology doesn't necessarily need to be regulated, but the outcomes, how it's used, most certainly need to be.
Yeah, you're right. And I think that we all can agree the next few years here are going to be crucial for blockchain. What do you think will be one of the major game changers, and how prepared do you think that we are to really adapt it to that?
Well, I think that what we've got to try and do, Trevor, we've got to get the user experience correct. At the moment, it's a very cumbersome process of having to have strings of memorable words and passwords, and it's not very user friendly. And so I think that what we need to do is see much better user friendly apps and techniques. I think the big breakthrough in terms of the adoption will come at a wholesale level. You've already got companies like JP Morgan, like Broadridge, in the wholesale market called repo market. They're doing a billion a month on this stuff. You've got people like HSBC. They have a platform called FX Everywhere, and that's done about $8 trillion worth of transactions over the last few years. It's faster and cheaper than CLS, which is what the main banks tend to use. And it's been so successful, now Wells Fargo are using it. So I think there's going to be a lot of adoption of the technology behind the scenes. You won't even know, and arguably, why should you know?
Yeah.
Do you actually question where you buy your car from or where you get your groceries from and say, oh, are you using pivot tables on an Excel spreadsheet? You're not even, it's just not going to be a conversation. But I think that if you've got a choice between, go back to the money market fund saying, you can either take 3 or 4 days to get your money and you get your interest paid every 6 months, or when the price of your fund is actually calculated by the same company that manages the money. That's your traditional mutual funds.
Yeah.
Alternatively, you can actually trade 24 hours a day, 7 days a week. You can get paid your interest weekly or certainly monthly. And the whole thing's priced by independent market makers. Now, the critics say, yeah, but hang on, Johnny, who wants to trade 24/7? Aren't you just encouraging a speculative mentality? So I'd say, look at what's happened with Robinhood, not as in the Sheriff of Nottingham here in the UK, but the brokerage in the US. Now, they allowed out-of-market dealing. And in the first year, in some months, out-of-market dealing was 25% of the monthly turnover. They did $10 billion of out-of-market trading. Because as we're having this conversation today, it's 5:30 here in London, the financial markets are shut. But I'm just about to finish work, and I might say, no, actually, I'd quite like to actually buy and sell, do this, that, or the other.
Yeah.
At the moment, I can't. The only thing I can do is buy and sell American shares. Europe shut, Asia shut, all the funds here in the UK shut, the London Stock Exchange is shut. But why can't I trade something 24 hours a day, 7 days a week? Because when I've got the time and ability to do it, and I think that's what we're seeing. More and more people are saying, look, I've got an app, I've got my phone, I want to do something now. I don't want to have to remember and phone up, a gentleman in a bowler hat and a feather quill pen and do it when they're ready.
Yes, indeed. So, Johnny, because we are running out of time here, and we do have one question. Julian's been waiting patiently. We'll bring him up here for a question, and if anyone else does have one, we probably might get time for one more in, and then we will close it out with just kind of just some state of the union with you, what you're doing, and some interesting things that we can be on the lookout for. So, Julian, you've been patiently waiting. I will bring you up here. Let's give you a second. Julian, thank you so much for joining. What's your question? And let's keep it to about 30 seconds, okay?
Sure. Hi, Johnny.
Hi.
Um, so my question is this. So I look at a company like MicroStrategy, where they buy and hold are custodians of their own Bitcoin, right? And currently, they also have ETFs on the market that you can buy. So basically, the end, purchaser purchase the ETF, but they are not actually custodians, or they don't actually hold the Bitcoin. The company Michael's strategy actually holds the Bitcoin and uses that as a basis to put out their ETFs. What is your approach to that for your company, or what is your thinking about about that type of business
Well,
strategy?
okay. Look, as Trevor said at the start of the show, we're not here to give financial advice. But some people believe that Bitcoin in particular is the equivalent of digital gold. Now we're seeing gold, the physical gold, hitting all-time highs at the moment
Hmm.
because there is a lot of uncertainty. There's a lot of geopolitical uncertainty. There's a lot of uncertainty at an economic level in terms of unemployment. Is inflation, has it really been defeated? In the US, money supply has gone from about 3 trillion to at one stage over 21 trillion. So all that money flushing around, that's why house prices are so high. That's why we've seen the stock market so high. And some people are saying, well, I think Bitcoin is a good investment because they can only make 21 million of them. And that's going to take till 2020, 45. And therefore, Bitcoin's going to go up in value. They might be right, they might be wrong. But MicroStrategy have taken a stance that they're going to hold Bitcoin as an investment. And that's because they think it's a good long-term store of value. That was never what it was intended to be. If you look at Satoshi's white paper, it was never meant to be like that. Some people have perceived that. So it's not really saying what they're doing is right or wrong. I think if you'd have gone back 5 years ago and said, do you think we're going to see ETFs in cryptocurrencies? I think most people would have said no.
Yeah.
But as I said earlier on, you've seen the phenomenal success of that as an ETF, as an asset class. And a lot of people have showed an interest. And you don't have to buy MicroStrategy's ETF. You've got all sorts of companies that give you a choice and selection. So I think it's very much in terms of what are you trying to achieve and why would you own Bitcoin long term? And if you want that as part of your diversified exposure, then you have a way of doing it without having to have a private wallet and everything like that. You just go and buy an ETF.
Yes, indeed. Thank you so much for that question, Julian. And, in terms of education, I think this will be the last question here, Johnny. I know that you've spoken about this a couple of times during the conversation here, and you do focus on education to help with adoption. How do you feel that's going on overall from your standpoint? And do you find that people are viewing blockchain as more as a threat or as more of an opportunity?
I think more and more people see it as an opportunity. And I think blockchain is a very interesting technology because I think off of a blockchain, you can hang other technologies, such as sort of Internet of Things, machine learning, artificial intelligence. And I see it just as a way, look, at the end of the day, a blockchain is being simplistic. It's not much. It's like an Excel spreadsheet on steroids. So it's just a way to hold data in a very, very secure manner. It's not a silver bullet. It's not the answer to everything. But what it does is give the ability to hold that data in a decentralized way. So we don't have to worry about, is all the information held on one particular file server? It can hold that information so it can't be altered. So, which is, again, really important because once you've got that information, you can store it and lock it. And that's why as we start to see digital money coming through, it will leave a digital fingerprint. So you can track and trace where that money has come from and where it's possibly gone to. And so I think that transparency and that immutability should give people comfort. And in certain places, it's going to be proved to be, I think, a very valuable technology which can radically alter the way in which our money's held, but also the way transactions are carried out on an ongoing basis.
Absolutely. What a wonderful way to close it out there. So, Johnny, I know that you're involved in so much and you're going to be at some events coming up soon. So, tell us, the audience here, for those that are listening or that may tune into our recording later on, what are some interesting things that, maybe ClearBank's doing or that you're involved with personally that you would like to share with the audience? If people would like to get in touch with you to talk about maybe just learning a little bit more, maybe partnering in some form or fashion, how can they do that? And is there any other parting words that you would like to leave with us today?
Yeah, if I've struck a chord with you and you think some of this makes sense, or you'd like more information, as I say, we write a weekly analysis called Digital Bites. There's no advertising it, there's no recommendations, and it's really trying to look at the commercial applications of this technology, and all the way in which digital assets are being used. And digital assets go from the sort of hairy, scary sort of cryptocurrencies and meme coins and things like that I've mentioned, all the way through to the tokenization of cash itself. So how we're seeing central bank digital currencies and how we're seeing tokenized deposits and stable coins. But it might be tokenization of an apartment or of a house or of a picture or of a car. So there's many, many ways in which the technology is being used and assets are being created. But I think don't take my word for it. Look at someone like Jenny Johnson from Franklin Templeton, or look at Larry Fink from, as I say, the biggest asset manager in the world. And they're talking about this is a real shift, and we're going to see the tokenization of many, many types of assets and potentially many types of funds, and make it much more accessible to a wider audience. And I think that has to be a good thing. And I'm not for one moment advocating that we're going to see the wholesale switch out of cash and checks and debit and credit cards. But why not give people an alternative? And if they want to embrace that alternative, well, I think that has to be a good thing, providing it's done in a controlled, regulated manner.
Absolutely. And how can people follow you or find out where Digital Bytes is?
Well, either just Google Digital Bytes or the company Team Blockchain, and every week you'll see we do a weekly show, a weekly radio show, and we get guests on, kind of like you've asked me to come on today, and they talk about how they're using it, why they like it, why don't they like it. Alternatively, you can find me on LinkedIn, Jonny Jonny Fry, and you'll see there. And happy to send you an example of our weekly analysis. And if companies want to use it, the way we make money out of it, which I think is important to understand, why would we do it? Well, we make money of it by effectively organisations have a license to use the content.
Yes.
And then once a quarter, if they want, they can write an article and we create a podcast for them.
Wonderful. And anything that is going on with ClearBank that we should be aware of in the near future? Anything kind of coming up in the roadmap?
Well, we're delighted that ClearBank have just recently been licensed and received their banking license in Europe.
Yes.
So that's really good news, which means that we're now able to not only offer, if you want to hold your deposits in sterling with the Bank of England, but you'll be able to hold your euros with the European Central Bank. So very, very safe, but also really good for your sustainability credentials, because the European Central Bank, the Bank of England, they don't lend money. So your money is being put somewhere very safe and secure. And you're not going into a bank where suddenly, oh, yes, we've lent money to companies that do experiments on animals or drugs or armaments or whatever it is that you would possibly be against. Your money is held very safely and securely at a central bank.
Fantastic. Well, folks, this has been very educational. I've learned so much here. And if you've enjoyed this session today, please take some time to connect and follow all the wonderful work that Jonny is doing. Jonny, I appreciate you for taking the time here. And for everyone that's joined today, I know that we are ending it a bit short, but I still believe this was a great conversation and looking forward to having more like this. So stay safe, everyone. Have a great week and have a wonderful day. And thank you again, Jonny. Take care.